Welcome back to Midcap Radar. Well, a few minutes back, you saw the results of Symphony, the Q3 FY25 results that came by. It was a weak set of numbers, but we now have the management. Mr. Nrupesh Shah, the MD of Corporate Affairs at Symphony, joins us now. Mr. Shah, anyway we look at these numbers, it appears to be a muted set. Earlier, you had indicated at the end of Q2 that there was a demand spillover, especially as far as the domestic business was concerned. This time around, the revenue decline in the domestic business seems to be a bit of a negative surprise. What exactly transpired over here? In fact, in Q2, you saw a 24% growth in that particular segment of the business. What exactly has transpired?
So as far as demand is concerned, it's very robust. There is a decent traction across the geography, across the trade channels. However, what has happened, as on 31st December, we are sitting on record unbilled advances, and unbilled advances are far higher than even our domestic sales, what we achieved in December quarter. In fact, it is more than 2.5 times of our historical December and domestic unbilled advances. What has happened? Most of those advances pertain to new models and new models production. Their dispatches we have lined up since middle of December and January, and hence there is a spillover of actual dispatch and sales to March quarter. As far as consumer sales are concerned, that happens during summer. So by this spillover, there is zero loss in terms of the end-to-end sales and profitability.
Mr. Shah, good afternoon. Thank you for joining in. You said demand is robust and you also spoke of unbilled inventory, unbilled advances, but that happened from the middle of December, right? But for the better part of the quarter, was there a lack of demand that led to this revenue drop that you saw during the quarter?
No, what I said, from middle of December, our new models production commenced. As far as advances and collection are concerned, they have continued throughout the quarter. But we could not bill and dispatch them because production of new models, and most of those unbilled advances pertain to new 17 models that was and has been lined up since middle of December and current month, that January and February, and hence there is a spillover of sales.
Mr. Shah, I wanted to get to your provision that you have made this quarter, this 46 crore rupees for doubtful debt, which is for Messrs Pathway retailers. You've mentioned that the provision for this account is fully complete now. How much have you provided for so far, including the 46 crores this time? And do you expect this amount, whatever that is, if you could tell us, to be recovered anytime soon?
It has been now fully provided for. So whatever is the net receivable, in addition to that, in earlier quarters also, we had provided for as required by accounting standard, which was in September quarter, June quarter, as well as March 24 quarter. All put together, including 46, it's about 58 crore, and now no more provision, no more receivable remains to provide for on Pathway.
Okay, Mr. Shah, you've said that demand remained robust as far as the new models were concerned, but you are unable to ramp up your own capacity and the operations. Q4, what is the status of operations? Have you started deliveries? How's the inventory in the system? Number two, the second question is, what is the situation as far as the subsidiaries business is concerned? We continue to see demand weakness over there. When do we see that recovering?
So there is no question of ramping up the production capacity. When we design and develop new models, they were always slated to launch since middle of December, because these new models were launched only in July, August of current year and were slated to produce like this. And they are fully as it was. expected. And we are very confident that in current quarter, entire unbilled advances and whatever additional orders we will receive, whether for existing or new models, we will very much be in a position to sell as well as dispatch, and we are slated for quite decent March quarter sales and performance as per all the signals. Coming to subsidiaries, yes, climate technology is not performing well, as it is very clearly evident. In climate technology, phase 1 of CODB reduction has already materialized. Phase 2, launch of new models converting into asset light, capital light, is now complete, and we expect its result to bear the fruit in the quarters to come. However, as you can see, IMCO Mexico as well as GSK China, both in 9 months and during the quarter, along with Brazil, have done very well. In fact, GSK China is a phenomenal turnaround story. Otherwise, GSK China was also at a similar stage where climate technology is currently. And same about IMCO Mexico few years before. So, barring climate technology, IMCO Mexico and GSK China are performing well.
Right. All right, Mr. Shah, thank you so much for sparing time joining us today on the show. Wish you good luck for the road ahead. That was the management there of Symphony talking to us about the quarter gone by and the road ahead.